we have got to look at what the markets did and talk about what they could do this upcoming week. I am Dr. Stock, Doctor of Education, and every night I have trouble remembering something, but eventually it dawns on me. We have got to take a look at the upcoming market catalysts, take a look at the technical analysis on the charts to see exactly where they could send us, and I'll talk about some of the results that I've done with my trades throughout this week and also some of the stocks that I'm watching. So this is jam-packed full of things leading up to next week. I'll also tell you about free stocks from Moomoo, my Patreon where you can see my buys and sells, and also things like my Tesla stock price prediction and earnings forecast. Their earnings, by the way, are October the 18th after the market, so you'll want to see that. And then also my options course over there, which is mostly what I use to provide extra funds to my portfolio so that I can keep on investing in the long-term stocks that I like best. In the meantime, right here, trading economics. If you really want to know what tanked the markets today, right here it is, 10 a.m., the Michigan Consumer Sentiment. I said to watch for this, and it could be something impactful to us. Somebody today in the Discord said, well, what things should we be looking for in the consumer sentiment? I said, well, any serious change to inflation could move the market, and any significant change that we would have also in the economic outlook could change the market, and we got both of them. So when we look at that, we were expecting 67.2 to 67.8. We went backwards to 63 for the consumer sentiment. For their preliminary results, they don't normally change too much by the time we get at the end of the month, the last Friday of the month, when we get the final results for that. So just to look out for it. 5-year inflation expectation, 3% versus the 2.7% that was expected. That was up 0.2% from the previous one, and that goes backwards when we talk about expectation, and we'll talk about the importance of expectation in just a moment. Right here, we went down to 60.7, so a 10% drop from the previous month, down to 66.7, so down 5 points from what we had preliminary for current conditions for the economy. So this is upcoming conditions, and then right here, these are current conditions, and then so that's the outlook on the economy itself. And then what do we get for the inflation expectations? 3.8 up from 3.2. Ouch. That number right there, if nothing else, that smacked us hard, and we can see that in the markets. So we'll come back to this. I do think that now's a good time to go over to the markets and take a look at consumer sentiment and see just how it impacted us. So right here, we're looking at QQQ, and if we take this down to the minute and take a look at the chart here, let's go back to the beginning of the day on this thing. There we go. And I'll give you guys in a moment to look at this chart and see if you can pick out where the drop happened, where that 10 o'clock hour is. It's right here, this big old pepper. Thank you, Stockmo, for the lingo, for the language. So at 10 o'clock, Michigan Consumer Sentiment Survey hits, and let's zoom out on this now so we can see exactly what followed that. Look at that stinking sell-off that we had. So we were up here at about 370, and if we keep on zooming out on this thing, the bottom on this thing came all the way down to just under 364. So we dropped about 2% just with the release of that. And right in here, I made a day trade. I'll talk about that in that run-up that we had through some technicals that I was tracking. I thought maybe we would hit bottom here. Turns out this ended up being the bottom for us, and then recovered and then kind of traded sideways to close out the weekend. So just some consolidation, some noise that was in there. But holy cow, talk about racking the markets when we look at that. So I think it's highly important that we pay attention to those economic indicators as they come up. Now, next week, if I show that, we're going to see that there's not a whole lot coming for us, but there are some things that we still want to pay attention to. So let me put that back up there for you. So here's the things that we want to pay attention to calendar-wise. We have Fed speeches coming up. So manufacturing index, yeah, that's going to be good. Bill auctions, they're important too. I don't know what the notebook crush report is. I should actually look at that. We also have this Harker speech right here, 4:30 cents after the market closes. So 10:30 could be impactful for us. So watch the market between 10:30 and 11 for what Harker has to say and how that impacts things. And then again at 4:30, same person. And then we go to the next day, Fed Williams, 8 a.m. We get another speech, retail sales information. But the Fed speeches, I think, are the big ones that we want to be watching here. And I think that's going to be highly impactful to what we have coming up. Fed Barkin also coming up. So that's on Tuesday. And I wonder if they'll calm down some of the fears that we have about inflation, because what they will want to do is do something to kind of pull that back, make us feel more optimistic, so a better outlook for the economy. But also, inflation is that number one thing that they'll use whatever language they have to in order to kind of rein in those expectations on inflation, so that way they don't become unanchored, because as they said before, that's something that can be detrimental to the markets and to the economy, because just expecting to have rampant inflation leads to rampant inflation because people try to buy things right away before they go up in price. So we want to be on the lookout for that. Wednesday, Not a whole lot coming our way other than some pretty general stuff, but look at that. We get more speeches coming out. Waller, Williams, Bowman, and then the Fed Beige Book. Then Harker comes out and talks again. More Fed speeches on Wednesday, and then we go into Thursday from there, and then Friday. So what are the big things then out of all this? It's actually the Fed speeches are the huge thing to look out for next week calendar-wise. The next huge thing to look at for next week calendar-wise are the earnings that we have coming out. So we get to hear from more banks, so that's worthwhile to pay attention to. And actually on Trading Economics, if you click on this icon right here and click on earnings, you can set this by country. So since we're in the United States, that's mostly what I pay attention to. I'll click on this. I'll clear out all the check boxes, check United States, hit save. There we go, and that's how that's done. And so you can see what got reported today or yesterday and how it was reported. You can see the banks from today did fairly well, and that was expected. The banks coming up on Monday, we have Schwab coming out and reporting, and then you can see some of the other ones, Service First that's out here, and then just some other financial institutions that we have. Johnson & Johnson, that could be a pretty big earnings to watch, so watch out for that. Lockheed Martin could be very important. For them, they could be reporting some serious guidance coming up, so with some troubling times, so maybe some technical analysis is merited. Looking forward to that one. So far, I don't expect these to change the market direction very much. Goldman Sachs Investment Bank, we'll see how they're faring and what they see coming our ways. That could be a big one coming up for us. Really moving forward to Wednesday. Here we go, Tesla. This one is one that I've been waiting for. So Tesla, you can see consensus EPS right now is 75 cents. I can tell you that's below what I have for them. And I have beat Wall Street in the past. We'll see if I beat Wall Street again in terms of accuracy with the reports they have. And like I said, I actually have that right here in the Patreon. If you're interested in seeing that, come on over and join us. By the way, top-notch community over there. Absolutely wonderful people. Another big thing that we have coming for us is Netflix. So we want to be watching that because that is a bellwether for tech for us. And we want to hear darn it about streaming just to see how things are going there. But then we also want to hear about subscriptions. Are people still continuing to cut subscriptions for them? What do they have coming up in the revenue pipeline? How do they plan to fill out that bottom line more? So we want to hear about that growth story from Netflix. And that's one that I talked about, shorting under its 200-day. And so anybody who took advantage of that, I'll show you what that looks like on there. It would be an option that if you took one at like $370 as the strike price, then that went up in price. Well, $367 is what I think that what I said over in the Discord that we should short under, went down to $355. That's a $1,200 difference just for one option. Just so you know, that's like going a 2x on that option if you chose something that had an expiration for this week or even a week out beyond that. So I mean, really, it doesn't really matter that way because we would be talking intrinsic value, but also extrinsic value is something that can really be something that helps to manage your risk. But that's another movie, another show, another another video for another time. My options course over at the Patreon as well, by the way. You can go ahead and check that out. So that's what we have coming up, and we want to watch those big tech earnings that we have coming up for us. I think that's going to be the other thing. So we have bank earnings, big tech earnings, and Fed. Those are the three things that we want to pay attention to for next week. So what does that mean outlook-wise? Well, let's go back to the charts for some technical analysis, and I will also tell you about the results from my trade for next week. So let me pop this back up here, and we're going to go back out to the daily chart just to see where we're at, where we've come from. So here we go. We're actually in currently this downward trend, and it's actually pretty interesting to draw the trend line across here. Actually, I already had it up there. Never mind. So there we go. Let me get rid of the Fibonacci's right now because they're just going to be noisy and in our way. Boom, there we go. And check out how we just touched the top of the channel there. And then what did we do next? We retreated from that. So that tells us that this thing that I've had drawn on here for weeks is really playing out. And not only that, but it came down here, smooched this bottom line, so it worked. Came up here, smooched this top line, so it's still working. The 50-day so far, the 50-day got blown right through. Like so far, the market didn't even really seem to care about the 50-day. I will tell you that being above the 50-day is a bullish sign. The fact that we closed down below it isn't too great for us. The volume's okay. The RSI is currently touching 50. I got to tell you, this puts us really in a no man's land as far as that goes. Let's drop this down to the hourly. I'll put the Fibonacci's back up, and we'll look and see how things are going for us. So let me zoom out on that one. And what we're going to do is pick up one of these bottom points that we have, and we're going to draw it to the top. So it looks like this is one of the most recent bottoms we've had. Draw it out to the top, and you can actually redraw these if you want to. So I can actually redraw up to here and see if it explains these prices that we're seeing a little bit better. And when you do that, according to this low that we have here, you can see how well it explains these movements that we had more recently, drop through, hesitated, drop through, hesitated. So not too bad on that one. So if I draw it out a little bit more, it might be able to explain a little bit more. We actually came down and tagged the 50% fib on this at 363, about that 364, which I said was a resistance level when we're beneath it. It's a support level once we're above it. So it is possible from here that we actually do start to take off, and we actually do have some levity in the markets Monday, Tuesday, Wednesday. I think hearing from Tesla and Netflix are going to be the big things that determine direction besides the Fed speeches. I think the Fed speeches won't be that bad. I think it's going to allay a lot of fears. I think it could put some levity back in the markets, and maybe we retake that 50-day and retest that top trend line that I have out here on the daily chart for you. If we did, that would be awesome and incredible to see that happen. Let me get rid of the Fibonacci's again. There we go. We can always draw them back on later. So it is possible we return back up to that trend line. That would put us around that 373 number again sometimes next week. And if not there, then you know that we have this course correction that we could come back down here and drop back down into the low 350s. That's something that's coming for us. And, we could possibly see it. What do we have in the middle? Right around like 360, 362, right in between those two numbers. So listen to what the Fed has to say. Watch the bank earnings as they come out. I don't anticipate a lot of changes there. Johnson & Johnson could also be telling as far as we get for consumer staples. And then big tech, Tesla and Netflix, I think are going to be the bellwethers there for telling us a lot about direction of the markets. And if we rally off their earnings on Thursday, we can anticipate maybe a good run into the weekend. If we fall from those, it could be something that we end up another week down in the red. We start to drift off more towards this bottom line. So let's talk about some of the results from the week. And then I'll also tell you about some of the things that I still have open, because it's not only just the winners. I have to tell you about the ones that are in progress and also the ones that have not fared so well. So I'll tell you about each of those. So one of those is Amazon. Amazon was one that I had a call option position opened up on Wednesday. Thursday, I sold it for 105%. So doubled my money there. I had a TQQQ put that I used as a hedge on Wednesday for Thursday, depending on how it went. And for that one, I closed that out at 1.4% profit. I had a day trade on Thursday, in which case I got 24% profit and a 43% profit on TQQQ calls. And that I had going from Thursday into today. So I got 43% on that today. SoFi, I had some covered calls. I actually have the wrong. There we go. SoFi, I sold some covered calls, and I sold them. I don't remember off the top of my head what I sold them for, $130, $140 or something like that. And today, while the market was down, I was like, I'll just close this out, and we'll just go into the weekend easy on this. So I netted $26 profit on that one, not percent, $26 profit, and pretty much free money. It was against the shares that I already hold anyway. Now I just sort of either made them cheaper or paid for 3 more shares of SoFi by doing it. And basically took no effort to get there. So that was pretty cool. And then I made a day trade today, in which case on the Qs with the 0 DTEs, if you know options and if you follow that kind of stuff, that one was 33% profit for me. So that's all the good news. I'm going to put that out there. Now let's talk about some of the other ones. I have a Disney call out there right now for 11/17, I think, whatever the monthly expiration is in November for options. I have a call option out for Disney. I'm looking for it to break 86 in order to turn profitable for me. Right now, let me actually look and say, I will give you the percentage right now that is currently down. So that is open. It's a loss only on paper, and it is one that I still anticipate to work out pretty well. And I can actually put the chart up for you guys if you'd like to and tell you a little bit more about that. So that one, I'm down 12% at the moment, but for options, 12%. If you're giving yourself like just 10% of room for an option to play out, oftentimes you're going to get stopped out every time you didn't give it enough room to breathe. At least that's my opinion on things. Do your own work and diligence, find your own style, see what works for you. But I can tell you that if I played this on a 10% stop, that it would be something I don't think would have worked out very well for me. So this is one I think will pay off handsomely. By the way, it is 11/17, and I went with the $85 strike just in case anybody's interested in that information. So that's what I have on Disney. That one's in progress. And I also have a straddle out for next week. And this one's an experimental one. I want to see what happens. So I did one call, one put on TQQQ, and just trying to see if I could play the movement on both sides of this thing. Really what I need, $2.50 in either direction on TQQQ, is something that will put me in a guaranteed profit scenario. So that one is just a small amount of cash. That one, about $250 I used just to see what's going to happen. I don't think that it's going to be a total loss. I think worst case, it's going to cost me about 50%. But like I said, that one, I even said it over in the Discord when I posted my buys and sells over there. I said, this is experimental. I'm going to try it out, see what happens. And really what that does, and you're like, why would you do that? Why wouldn't you just write it down on paper? Sometimes that little bit of pressure is the thing that allows you to really lock in and focus. And for me, who can be kind of a scatterbrain, doing something like that and not wanting to lose that money, I will lock in and focus on the details, what caused it to be, what was good about it, what really worked about it, and what really didn't work about it. I can tell you one thing that doesn't work about it is the time value that these options, if we go nowhere, if we stay right in between them, there's not enough volatility to make that straddle worthwhile, then the time value alone is going to be the thing that is going to eat away at it. Now, mind you, if we get a $2.50 move in either direction throughout the course of the week, that's something that will then turn into profitability. So we'll look and see on that, and I have some ideas about it, and I really want to flesh that out. And I think by having a little bit of skin in the game on this play, it's really going to cause me to focus on what exactly it would take in order to do this and better ways to execute it. I have a few different ideas that I'm going to jot down about it. Let me see what else I have. So let me put up the charts for this one. I mentioned this in a previous video, and I wanted to give you guys an update on it. So what I have circled here, this is AI, by the way. C3AI is the ticker symbol on this one. Well, AI is the ticker. C3AI is the company. And what I was wondering yesterday, we have this, let me adjust this a little bit more for you. There we go. So we had this little double bottom that was in here, but we were also in a downward trend. We had a death cross coming, and I was like, what's going to win out here? Are we going to have market momentum be the thing that's really going to help us out? Or are we going to have this technical play out? And, you know, the market bias definitely didn't help us. The fact that the death cross is coming doesn't help us. The fact that we're on a downtrend right now doesn't help us. I was wondering, with this minor double bottom, I thought maybe it might be enough to push us up over, and I spent less than $100 on this one just to check and see. I'm like, what exactly is going to win out here? Again, very clear that this was something experimental, that the options were dead because I went with an October the 13th expiration, which is today, so those are done. That's over. And I went with a slightly out of the money strike on this in order to just put less risk capital on top of it, even though it is higher risk probabilistically speaking. I can't say that word, so bear with me here. So as of right now, that death cross is winning out. So here's what to watch for, just in case you want to turn this into a put option play, and do your own research and due diligence. I can't give any financial advice. I refuse to do it. I don't know your situation. I don't know your plans, anything. I'm also not licensed to do it. So this might come back up and retest the 200-day, and if it gets rejected off the 200-day, that could be the thing that sends it further south, and then we have this death cross really play out for C3AI. So that's something that we could watch out for in the time being. Now, mind you, we haven't broken back down below here. Maybe we bounce off of like 23.50 for support, and we head back upward. Maybe we break resistance, and then this thing really plays out, and I just didn't give it enough time. That's something that could happen. Fortinet is also another one that I have open right now. FTNT, there we go. So this one, we have a head and shoulders play, and I actually bought a put option at the bottom of this thing, thinking that we could possibly see enough market weakness to really send us downward. And so this was a candle that we had where it just had a really narrow body down towards the bottom, had a really long top wick on this, and I was like, maybe we'll get enough pressure, and it went opposite the markets today, that's for sure. Just pulled right back up, and so we didn't get that drop that I was hoping for. There's some things about this that weren't perfect about it. And this one, again, very small position, super small, just because I was like, maybe the head and shoulders will play out. What I didn't like about it is that it's already down pretty close to the bottom, and we also had a fair amount of support down here. But I thought possibly by next week, and now mind you, this one is still open, Disney's still open, my TQQQ straddle's still open, all of those are still open. We'll see how each one of them goes for next week. So Disney, I said, was down about 10%. This one that I have on Fortinet is down 46%, which sounds like, oh my gosh, it's $25 down. Now, mind you, I don't want to lose any money. I still think it could work out as far as the head and shoulders pattern goes, but I wasn't certain enough where I wanted to eat the weekend risk, and I thought maybe just possibly it would pay off as soon as today. So I stepped in. We'll see how it goes for next week. So just those small amount of risks, and I got to say, overall, this is a very winning list of things that I have here. I still think that Disney's going to do well for us. Let's toss up Disney. There we go. And I keep on typing in the N for some reason. I feel like that's a channel instead of, there we go, DISN. So what we have on Disney when we look at this thing, let's get rid of the Fibonacci's just so I can show you some trend lines on this. We have this beautiful descending wedge happening right now on Disney. And I think that it's one that when it finally does decide to break this top trend line, I think that it's going to reverse beautifully. You can see right now that it did get rejected off that top trend line. We are still, and let me do some further adjustments here, and then we'll exaggerate a little bit and move up. There we go. We are still above the 50-day. That is a good sign. Think about all that market trouble that we had, all that market chaos, and Disney held strong. I think that we're actually finding bottom on this one. And I said I need this thing to break about 86. So that's what we're looking to break. And it's an $85 call is what I have. And I'm looking for this thing to get closer to its 200-day, at the very least to come up and try out that $90 mark on us. And I have that out through November 17th is the expiration date on that one. So for Disney, that's what I'm looking at. I think that it's possible. We have the momentum there, and we have the formation there, that it's starting to get time that we're starting to see bottom on this and that the sell-off is over. Netflix could be one of those things to really watch out for this, because even though it's not Disney earnings still, Disney Plus as a streaming service that was supposed to be the cash cow. Let me reset the chart view. We'll zoom out a lot on this one. This is what Disney Plus was supposed to do. And this is what Disney Plus ended up doing. So just so you have that in mind. Netflix, by the way, just so you know that the two of them, if I can get my fingers to work right, there we go. There's Netflix, and you can see they've had their own trouble of things. Yeah, that was down through 2022, but look more recently, and you can see that things aren't working so well revenue-wise for them. I think the ad revenue from the ad tier isn't working as well as they hoped. And the more recent drop, I think, is because of UK subscribers not growing as fast as they had hoped and killing off that growth story. Now, mind you, I said about shorting Netflix, and the reason I did that is because we have an upcoming death cross and we could possibly break down below the 200-day. We did. There was our signal, and then here we dropped down more, and then you can see the candle all the way down here. So I put this out in a video. This is one of the opportunities you should look for. If you did, let me know down in the comments. I would absolutely love to hear from you. Down in the description of this video, you can find your free stocks from Moomoo. Sign up. I use that platform for my options trading. They have advanced option trading strategies. They have an options analyzer. They have an options calculator. They can tell you between the market close and the market open the next day, they can tell you where they think that price will open at. So you can sell some of your options as soon as they open. It's pretty cool. But I do want to move on from there. So there's the deposit tiers that they have. Here's the free stocks that you get at those deposit tiers. If you want to see what I'm buying and selling, how I'm playing this market, check out my Patreon. You can access my Discord through that. And my community are absolutely awesome and wonderful people. If I go over here, the Tesla stock price prediction and earning projection, that is also up on the Patreon, free to all tiered members. It is available in the shop if you're not a member of the Patreon and still want access to the Tesla stock price prediction anyway. And then my options portfolio, if you don't know anything about options, but you're looking to amplify your portfolio, add some alpha, some possible alpha to your portfolio by learning about options and taking advantage of them at the right opportunities. Yes, they have their risks. Yes, they can cost you if you don't know what you're doing, but when you really do learn about them, and that's exactly why I'm making that options course, it can really amplify your portfolios in ways that you didn't think were possible and put out numbers like I've read to you that you also didn't think were possible. So thank you guys for watching this video. Let me know what you think of it down in the comments. Hit the like button if you liked it. Subscribe, please, if it's something that you would like to see more of. And like I said, Patreon link's in the description. The Moomoo link is down in the description. Thank you guys for watching this video. I hope you have a great weekend. And I am Dr. Stock, Doctor of Education. Remember, my friends, that learning is earning, and I'll see you in the next video.